Hey everybody, Art Wood, Art Wood Mortgage Team, your favorite mortgage guy on the planet. Just ask me, I will tell you. So it's been a minute since I've given you a market update. I'm just going to tell you rates have just kind of been ho-hum. They haven't moved a whole heck of a lot, as I tell you, to follow the, put on my eyes here, to follow the 10-year Treasury, and it's kind of been in the range bound from 4.12 to 4.3, which basically means interest rates have moved about an eighth, still sitting in the low sixes. But the big news was that Trump nominated Kevin Warsh to be the next Fed president. Well, we would have thought that whoever Trump, because Trump disagrees with Powell and thinks the rates should be going down faster, you would have thought it would have been a more dovish, which means interest rate friendly, bond friendly Fed chair. Well, he didn't. Kevin Warsh actually is against the Fed's actually holding bonds and treasuries and stuff, and actually thinks that they should be a net seller of them. They should be selling them off. Well, selling them off, as we've talked about, when the Fed sell those off, then they become a net seller, and that hurts interest rates. So when he was nominated, actually rates went up about an eighth over a few days. But the other thing he's a fan of is a fan of actually cutting the Fed funds rate. So when we hear the Feds cut rates, that's not mortgage rates. Those things affect HELOCs. They affect car loans. They affect credit cards. They affect deposit rates and interest-bearing accounts. So, but he does think that the Fed funds rates is about 0.75% too high, which makes it in restrictive territory. So I think we'll see. It was kind of push-pull. But then this week, because of the partial government shutdown, we had the actual BLS big employment data pushed to next week, and CPI will be next week, which is inflation. So there's a lot to be said. But anyway, yesterday we actually got a nice little bump or pop to lower rates down to where the Treasury was down to 4.2 because ADP coming out. There's another one, Challenger came out, and we lost jobs at the fastest time in January since 2009. We only had 22,000 jobs per ADP that was actually created, and those were all in health services and education, which is not a good litmus test for the economy. Small businesses are losing business, anyway. So, and then we also saw where inflation is coming down. So everything's kind of set up to where hopefully we'll get some lower rates with jobs being crappy and inflation coming in down to the 2% number. So anyway, a lot of information to take it in. As always, I'd love to turn your mortgage into a work of art. Y'all be good.